All right, good morning. This is Nick Webb in for Dan Russo today for Chaikin PowerFeed TV, your daily market digest. Today is Monday, July 16th. Happy Monday, everybody out there. Dan is on vacation till Thursday, so I'm stepping in for him. Hopefully, I can do a relatively decent job, but we'll see how that goes. It does mean a very early morning for me to get up and get all this stuff prepared. But I love doing it. So let's move on here. What do we got going on? So the S&P. Well, Friday they were dancing with breaking above the 2,800 resistance level. It didn't quite get over it for a close, but more confirmation is needed in terms of whether or not we're going to break through or not. If they do break through, the next resistance level is probably 2,850, possibly 2,900, depending on how they break through. But we'll be watching that today, and hopefully there's good news in the markets today. On Friday, the major banks reported mixed results. That's JP Morgan, PNC, Wells Fargo, Citibank. Mixed results. JP Morgan had pretty good results. PNC had a great result. Wells Fargo, not so much. They had a miss. Prices for these firms by and large stagnated. So this was a blow because it really looked like major banks were going to have a big quarter and get a blowout result. We'll keep a lookout. There's a couple of them reporting today, Bank of America and BlackRock. So hopefully they can get back on track. But not as good a result as we were hoping in the major bank section. Overseas markets. This is encouraging because on Thursday, trade war fears had really knocked the overseas markets in Europe and Asia down. They recovered nicely on Friday, clawed back most of their gains. So far today, it is mixed. As we go into earnings season, obviously Friday was a big day. Today is going to be a decent sized day. But then as you proceed over the next couple of weeks, pretty much everybody's going to be reporting earnings. We have a earnings season alert coming from FactSet. They are reporting that a significantly high percent of companies are raising guidance relative to the normal trend. So they normally see guidance, I think, in the 50 company out of the S&P 500. It's now in the 70 company range, which is significantly higher than they normally see. The flip side is they're seeing less percentage of companies lower guidance. So really good news as we enter earnings season. It could be a blowout. One note that I picked up is that most of these companies that are raising their guidance are technology firms. So that's an area of interest that we should explore as we go over the next few weeks through earnings season, because if they're feeling confident enough to raise guidance heading into earnings, that probably means the estimates are going to come in pretty sweet. On the international front, China reported their Q2 numbers today. It's going to be something we're going to have to keep an eye on, because if China gets sick, it really does impact the rest of the globe. You can kind of think of them as the canary in the coal mine because they export so much. And so if their GDP is not growing at the normal rate, it means there's less demand for their goods coming out of the US and Europe. I don't think this relates to the trade wars yet. So this is a early sort of precursor to the trade wars, and so something we definitely should keep an eye on going forward. Today, the future markets are pointing to slight upward gains. As I mentioned earlier, there have already been some earnings beats by both Bank of America as well as BlackRock. The only fly in the ointment here is that BlackRock came back and said that fund inflows into their funds over the last few weeks have been down due to market uncertainty. So would have been nice if they had just left that piece out. Anyway, as we move on, here we go. The S&P. This is the chart for talking about yesterday, getting really close to that 2,800 level. Support levels are literally at that 2,800 and 2,750 or 2,700. So 2,800 resistance, 2,700 support. You can see they've danced with 2,800 quite a bit. They're getting really close to it right now. Today, if it's a good day in the market, they should break through. The other thing to notice is, even though our attention's been focused on news, whether it's trade wars, Trump this, Trump that, or any of these other areas that are causing the market to move, there's still a very solidly long-term rising trend for the S&P 500. There's even a more solid long-term trend in the small caps. So even though there's a lot of news to focus on and it's been moving the market up and down, the general direction is positive. And that's really because the underpinnings in the market are solid. Earnings have been coming in very strong. Q1 was great. Q2 looks like it's going to continue. So there's a lot to like about this market. Interest rates, even though they've been rising, still are not to the level that are going to harm this market. As a matter of fact, gradually rising short-term and long-term rates are not that harmful to the long-term market, as long as it's not a sudden increase. So overall, and it doesn't, continue to go, obviously if it continues to go over 5%, then I think I'll change my tune on that. But this gradual rise that we've seen in interest rates really haven't been harming the market at all so far. So the only thing I would caution is that Chaikin money flow recently has been a little shy, started to creep up over the last week. If institutions start pulling their money, which is what Chaikin money flow tracks, that would be something that would cause some concern. But in general, this is a very solid picture. Be interesting to see how this looks after today. So what was the market action on Friday? Well, it was kind of boring. Dow was up 0.36, but the S&P, NASDAQ, small caps, they were all pretty much flat. So nothing earth-shattering to report here. What you can see is that the power gauge, or the power bars that indicate how many stocks have bullish power gauge ratings versus how many have bearish, they've all sort of migrated back into the positive territory. So companies, again, sort of showing stronger financials, stronger earnings, stronger estimates than they had in the past, and that's basically been reflected in this power bar. So you can see, for example, the S&P 500, Chaikin Analytics has 87 that are rated bullish versus 78 that is bearish. And that's a nice change over the last couple of weeks where the bears were beginning to win out. So good signs again for the market. And again, that talks to the underpinning. The market is solid. So let's go to the stock of the day. It is Glue Mobile, which not one that was in my repertoire, not one that I was totally familiar with, so I had to do a little research on them. They have under $1 billion in market cap, so this is more of a speculative play. They do mobile games, and they work with very large manufacturers, so they provide the games to them. It's a stock that Chaikin has been bullish on since April, so this is not new. If you can see from the primary factors, financials are strong, earnings are very strong, technicals are great, and the experts are strong. Estimates look like they're in good shape coming out. So this is an interesting company, one that I would not have picked up. But again, this is kind of the fun of PowerFeed. It has a algorithm that selects these companies based upon strong industries, strong stocks with good underpinnings. And so Glue came out today. You can see you get it at a discount because it had a rough Friday. So that's an interesting one. Let's move on to Sector Tracker. Again, nothing earth-shattering here. These moves are pretty standard. A couple things to highlight, though. You can see heading into earnings season, industrials, discretionary, consumer discretionary, and technology all look like they're solid. And I think this bodes well for earnings season. I think people are confident going into earnings season. They're seeing these areas really begin to shine. Technology has been an earnings superstar for 5-6 quarters now, and that looks like it's going to continue. Discretionary, though, is one that is newer to the superstar fold. And you can go back to, I don't know, January when people were writing off this sector because of Amazon basically dominating, basically calling all other companies into question. Obviously, that was an overreaction. Things look solid there. So in general, again, healthy market over the last 5 days. So our industry focus is on a bearish industry. We're taking a look at the semiconductor services industry. This is even though it's outperformed the S&P 500 by 1 1/3%, it's got a negative power bar rating, which means that there's more companies in the red that we're sort of worried about than bullish. And obviously the big one on the block here is Qualcomm. They're running into some legal difficulties. There's some question as to whether or not they're going to be able to maintain their, I hesitate to do it, but I've got to call it a monopoly in some of their communications underpinnings. So it'll be interesting to watch this sector, but I think that they're running into some headwinds and possibly have a little bit of a pullback coming for them. So we've already talked a lot about the earnings updates. We've talked about how PNC, Citigroup, and JP Morgan beat their estimates. Wells Fargo came in short. I think they're still suffering from some of the scandals that have been plaguing them over the last several quarters. So they did not meet their estimates, and that was a disappointment. They got punished for that. Reporting today, we've got Bank of America and BlackRock. We rate both of those neutral, but again, they've already reported and both had good earnings. The one that's interesting, and it's going to be after the close, is Netflix. They've run into some headwinds recently, and we'll talk about it on the next slide, but it's one that you really have to watch to see how they're doing. They're running into more and more competition from Amazon Prime, from HBO. It'll be interesting to see if they can keep their market dominant position. So what's trending? What really moved in Friday? We say yesterday, but it was really Friday's S&P movers. The one thing I want to talk about is if you look down the column of the S&P 500 gainers, you can see that you've got Ulta, which is a cosmetic company, Starbucks, American Airlines, and Walgreens. All of that is in that consumer discretionary that we pointed out earlier. So again, very healthy. Of course, over on the other side, you've got Netflix and Mattel, which are also consumer discretionary. So you've got mixed message there. Netflix as I said before, Netflix is reporting today after market, and on Friday they had some rough headwinds. So is that a precursor to their earnings report? Is there some whisper noise that they're not going to make their number? Again, we'll see after the market today. One thing you also want to call out is Broadcom, which is AVGO. You never want to be on the S&P 500 losers list 2 days in a row. Now, obviously, they're making a big move with their Computer Associates merger announcement, but again, you don't want to be on the bad side of that. So just calling them out on that. So that's pretty much it for the PowerFeed today. What I do want to highlight is that this is something that you can get yourself. You can get all those charts that I showed you today delivered to your inbox. It comes in roughly around 9 o'clock in the morning, so well before the market opens, so that you can get interesting analysis, tips, and techniques. Just go to chaikinanalytics.com/PowerFeed TV to sign up for it, and then that's it. You'll start receiving that every day. And this is something that I think you'll find to be incredibly beneficial. So again, this is Nick Webb. I'm in this week, Monday, Tuesday, Wednesday, and Thursday for Dan Russo. Dan is back, thankfully, on Friday, and he will be presenting on Friday. So thanks again for your attention. Feel free to email me with any comments. I'll talk to you later. Bye-bye.